Hello everybody. So I hope everyone's enjoying the holiday break, and I wanted to make a quick video. And I'm gonna seem yet again like an Enphase and a Tesla bull, but in today's video, the topic is the rate cuts are coming, and I want to specifically focus on three stocks that I believe are going to benefit from this decline in rates. And that's because if you go throughout 2023, right, the year we're ending today, and late 2022, the narrative was rates are going up. Who's going to buy any of that stuff, any of these expensive consumer goods, consumer items? Who's going to buy that when rates are very high? And so to a greater extent, you could make the case, one could make somewhat of a case that people buy less when rates go up. But that's a very Keynesian way of thinking about the world, right? I mean, if you follow the channel, you may know I'm more of an Austrian view type of person. I believe in Austrian economics, and I believe people buy stuff because they need the stuff. They don't necessarily buy stuff because the rates are cheap. Nonetheless, the market is going to interpret these low rates that are coming. They're going to interpret them positively, and I think we're going to see a shift in the narratives of people are going to be able to afford more big ticket items, and that's going to benefit a few stocks. But let's just rejoice a little bit about the predicted cuts. We have a first cut that's predicted in March of 2024, a first cut, and if you look at the CME FedWatch tool, I mean, they're predicting well over a full basis point by the end of 2024, and these are steep rate cuts, and the rate cuts might be even faster. And so if you remember how quickly they were risen and they surprised everybody, well, I think the speed at which these rates will be dropped will also surprise everybody. But then again, I tend to be very optimistic on this channel. So let me go ahead and briefly talk about these three stocks. They will be no surprise to you if you follow the channel, knowing that I've updated my revenue growth number and my forward gross margin number on this, going back to the predictions that I had in the earlier days of the channel when I used to cover the stock. And so I'm predicting 37% revenue growth and 26% gross margin. I think the gross margin will increase for Tesla, as Tesla will be able to raise prices when those rate cuts come. And also the point of sale payments in the US, the $7,500 released at the point of sale, that's tomorrow. That happens tomorrow, which I think is going to be really positive over the long run for Tesla. And if I look at a company like Tesla, sure, in my usual spreadsheet and the way I value stock, which is enterprise value over gross profit over revenue growth, that metric is often high and seen as high, and it's still high. But again, over a very long term, I don't think this fully captures the potential of this company. And the potential of this company, in my view, is great. They are the Standard Oil of today. They have business lines that could be as big as auto, and people say, "Oh, it's just an auto company." No, it's not. It's an AI company, right? It's the gas station of the future. It's an energy storage company. It's a Uber/robotaxi company. They have so much going for them. And when I look at the stock for Tesla, keep in mind it traded for a week-ish. It traded above $400. You may remember back in 2022, it traded past $400. We're still not past that number, and I think it will get back to this number at $248. Sure, the stock is a little more expensive than it was when it released earnings last quarter, and we got a chance to briefly see it under 200. I remember buying a few shares at 198, I believe, or 197, something like that. But 248, in my view, is just still a cheap stock, and I'm very happy to accumulate it. This is a stock that's going to benefit from rate cuts. Why? Because the narrative is going to be, well, this is a $50,000 car. Americans, but around the world, really, we're payments buyers. People are payments buyers. If rates go down, that means that your same payment affords you a bigger car, a better car. And so people are more likely to buy Tesla cars, or they're more likely to get some options like FSD 12, which is going to be released more and more widely. And we're going to see a greater take rate, for example, in FSD 12. We also have a Cybertruck coming. People are complaining sometimes, the Cybertruck, calling it expensive. But we see more and more serious analysts on Tesla predicting 250,000 Cybertrucks produced over the next 12 months. 250,000. Think about that. That's tremendous. And so I'm very happy to buy Tesla at these levels, and I believe this is a company that will benefit from the lower rates. The lower rates, you're a payment buyer, you buy a payment. These rates lower mean that you can afford a car when you could not afford a car previously at higher interest rates, and that's why these drops in interest rates will be a catalyst for a stock like Tesla that sells big ticket items. Another one, and I've started covering this one on the channel. It's a new stock for me, but at least it will change from my usual Tesla and Enphase video. It's a new stock for me. It's Inmode. Inmode sells, they sell these cosmetics machines. They're called micro needling cosmetics machines. They're kind of a hybrid, no, not a hybrid, but they sit at the intersection between laser procedures and cosmetic procedures. Anyways, the point is one of these machines typically costs $75,000. Your doctor's offices that offer these services, they often have to finance that, right? $75,000, $100,000 for the more expensive machines that they sell. Clearly, they've seen a drop in the adoption of their product because of the high interest rates right now, knowing that doctors tend to pay interest rates very similar to the rate of personal loans, for example. And so that's directly impacted by the Fed's interest rate. And so as this goes down, I believe this is a company that will be able to sell its cosmetic medical devices again, and I think we will see more and more adoption, and I believe the market is really sleeping on this company. This is a company that's trading at a 20-ish dollar price, and it traded near 100 before we started this rate cut bluff, as I call it, and this higher for longer narrative. Before that, it was trading a good 5x more than it is trading today. And if I look at the valuation in my spreadsheet, which again I haven't changed much, I've just updated revenue growth to 20%, knowing that Seeking Alpha has it at 14%. I believe it's too low. I believe this company that's going to grow faster than that because they have kind of a best-in-class product in their field. If I look at that price, enterprise value over gross profit over revenue growth, I'm not paying that much at a 0.14. Not as cheap as a HIMS or a StoneCo, but still pretty darn cheap. And I believe this is a company that's going to benefit from that. I could have put another company I've covered on the channel before, which is called Lovesac, which is a furniture company. I could have put Open Door to small caps, many small caps that deal in this big ticket item type of sell, right? Any business that sells a big ticket product should benefit from the shift in narrative regarding the rate cuts. They should benefit from that and from greater demand from lower rates. And lastly, the last one that's going to benefit is Enphase. As you know, I've been pounding the table on Enphase. It's unbelievable to think that this stock got near the 70s just a few weeks ago. Absolutely unbelievable. At $132 a share, in my view, Enphase is a steal, and I am still buying it, albeit less than when it was trading just below 100. But I'm still buying it because Enphase is still the leader, and it's the holidays. I'm in Europe right now. I can tell you solar adoption down here in southern France is much, much greater than it is in the US. And when I drive around my Texas neighborhood, I see maybe 5x fewer solar roofs than I do see here. That's a company that's coming to the US. More solar panels are going to come to the US. There will be a time where when you take a walk in your neighborhood, when you walk down your neighborhood street, 9 out of 10 roofs will have solar panels. Mark my words. Just like today, if you walk in any neighborhood, 9 out of 10 homes have an AC unit. They have an AC unit. Every single home has an AC unit. Solar panels are going to be ubiquitous in my view. And this drop that we've had in solar adoption has been the fact that in the US, a solar install, if you want a decent solar install with a battery, and something good, and labor is more expensive, so it's about 30 grand, right? 30 grand, most people want to finance it. It's a little cheaper in Europe, actually. You can get something very decent here in Europe for less than 20,000 euros. You can get something very, very nice. And that's going to be impacted by the rate cuts, because when those cuts, when those rates get cut, the product, that $30,000 to $20,000 item, as a monthly payment becomes more affordable. So either your monthly payment goes down, or when you previously were not able to afford the solar system, all of a sudden you're able to afford the solar system just because the rates have gone down. And Enphase is a company that I believe will also benefit from this shift in rate cuts and this shift in the stock market narrative, knowing that if you look at any of the charts of any of these three companies, whether it's Enphase, Inmode, or Tesla, you can see it has not begun to be priced in my view, and I can't wait for March and to see how these stocks behave in March when it is settled, when it is guaranteed that we see that rate cut. Because it's still odds today, but in my view we'll see a rate cut. This is obviously no investment advice. This is no advice of any kind, no financial advice, right? This is just entertainment. I hope you were entertained or edutained. Please like, please subscribe, and have a great last day of the year, and I'll try to make a quick video tomorrow as well. But 2023 really has been a wonderful year, and it's been a blessing, to run this channel throughout 2023. And I have so many of you follow me, and so I'm very grateful. Looking forward to 2024. Anyways, no financial advice today or ever. Thank you for watching, and have a wonderful day.